Let's take a phone call to kick things off. We're talking to Henry, who's in Lindsay, Ontario. Good evening.
Good evening. David, my question is on SXC Health. As you know, this company has dropped in price dramatically the last day or two. I've been trying to get a hold of the company, and I can't seem to get through to them. Do you know what is really wrong with this, and should I sell or should I hang on? Thanks.
Right. So SXC, for those that don't know, has been a very successful healthcare information technology company, selling their services to healthcare providers. And yesterday, they got a little bit of a nasty surprise. Cigna made a bid for HealthSouth, who are a significant customer of SXC's. They have their own in-house technology that they use, and this probably doesn't bode well down the road for the continued contract with the SXCI. So conflicting comments as to how much of the revenue it represents, but it could be 35 to 40%. The contracts are in place. They will be in place for the next, I think it's 3 years, and then we'll find out what happens beyond there. So there's obviously a big customer at risk. It turns out to be a byproduct of a deal. It's something that didn't really show up in the stock previous to the deal being announced, so I don't think people had a great opportunity to exit. You know, we're in a very jittery market. Stock took a pretty good hammering yesterday, and I think that lots of people were in damage control today. I don't think there's anything wrong at the company, but this is a big piece of business that's at risk, and the market's, you know, discounted it in a hurry. I'll tell you, we have a small position in SXCI. We sold a half of the position yesterday. My guess is we'll probably exit the rest. We'll see over the next few days. You know, when a stock basically goes no bid, you don't want to push it out over the edge of a cliff. But I think it is a challenge for the company going forward, and we're going to look for additional color on the situation.
Do you think that bit of information that they rely so much on one company in terms of their revenue and profit might have been something that somebody could have pulled out and recognized that somebody else wouldn't see, you know, get that advantage and say, hey, you know what, I'm going to short this stock because of this? It's certainly a risk. Having said that, the company has been extremely successful over many years. It's been one of the best growth stocks in the Canadian market. And ultimately, my guess is they probably will continue to grow. You know, they've got lots of other business. There's a couple of contracts got announced today. So we'll have to take a good hard look at it. But I think you can assume that they are going to lose some business in a few years, and you've got to discount that back to the present. We've got Lisa waiting on the line. She is in Toronto. Good evening.
Thank you for taking my call.
You're welcome.
Mr. Burrows, a while back you recommended the stock out of New York called Precision Castparts. I didn't purchase it at the time. I don't know how the stock is holding up, and if you would still recommend buying it today. If you do, what would be an entry point? What would you put as a stop loss? And when would it be a sell if it goes too high?
Okay.
Which I doubt in today's market. But anyway, I'll appreciate your answer. I'll hang up and listen.
Okay, thank you, Lisa.
Great. Okay, Lisa, great questions. So Precision Castparts is a company that does machine parts largely for jet engines and turbine engines. And they're a big supplier into the aircraft industry to customers like Boeing and Airbus. We know that there's a huge replacement cycle going on in planes as airlines try to become more efficient. And Boeing, of course, have their new jets coming. And so they're a big beneficiary. We are invested in a number of the companies that sell into this infrastructure. We own Precision Castparts. We own Triumph Group, TGI in New York, and a couple of others. And I think that this is a good theme to be invested in. This is a long, secular, multi-year theme that we're going to see play out in front of us, and I think that it's one that you can benefit from. So I would buy the stock here. I don't have the chart in front of me to give you the stop point, but I think that you want to identify the price below the price you pay where you'd go to the sidelines if it turns out not to ultimately work. Having said that, the companies in this space are reporting very good numbers. So I'd be very happy to buy the stock here.
And that was quite a chart we looked at there from that company. Let's look at an email from Max on Shoppers Drug Mart. I've been a long-time holder of this company. Do you see any upside left in terms of share value? This company, of course, had the big hit because of the change in the way the Ontario government is going to deal with generic drugs. That was about a year ago or more.
Yeah.
What do you think?
Well, there's probably some more color actually coming on that in the month of November. So there's still some question marks around this. Shoppers is a tough one because they've done a great job in the front of the store, and there have been pretty good margins there, and they've had some growth. The regulatory questions cast a little bit of a pall over the stock because you don't know just how profitable the generic drug business is going to be. They're looking for approval to sell their own private labeled products, and I think that there's a question mark there. It's not an inexpensive stock. I would say I would prefer to focus on discount retail right now, and there's a number of them. I think that that question mark is going to be a little bit of a lid on the stock in the short run.
Are you thinking of, say, a Dollarama, that kind of stuff?
Yeah, Dollarama I think looks pretty good. In the States, TJX, Costco, I think all three look very, very good.
All right, let's talk to Don, who is in Ottawa. Hi there.
Yeah, great show, Mark.
Thank you.
David, I'd like your comments on Ford. I got in at about 16, and I'm looking for a bit of a recovery there. Is there any hope? Thanks.
Yeah. So, Don, we own some Ford, and the auto sector is one that we have some investments in, and we're not in every group, but we own Ford, and we also own a couple of the parts companies. The net of it is that due to the recession and what happened in Japan, there was obviously a big slowdown in auto sales. Inventories on the lots are not particularly high, so there's a rebuild going on in inventories. And sales have been pretty strong as the average age of the average car on the street now is well beyond what it has been historically before it gets replaced. Even used car prices are very high right now because it's been hard to get new cars if you look across North America. So we think that Ford can do quite well. We think that there's a possibility they reinstate a dividend over the next year. That's something we're spending a lot of time looking for is dividends. And if I had to buy one of the automakers, this would be the one I'd like to own.
Right. Some analysts the other day were talking about the possibility of a dividend within maybe 6 months. What's your average cost on this one? Because it had a great run to 20 or so and then pulled back.
We've owned it twice. We owned it off the early part of the rally in 2009. We came out of the stock. We bought it back in the beginning of October this year.
Okay, so you bought it pretty cheaply, around 10, 11 maybe, or
yeah. But I would be adding to it here.
Okay, very good. Let's take a short break here with David Burrows. He's answering your questions on North American large caps, and we will continue that process right after this.